Hey guys, so we're going to break down timeframe confluence from the top all the way down to the intraday timeframes for pivot entries. So here is the pound Aussie weekly. We had a break of trend line, which was the first signal of a trend change. We then had a lower high form, which confirmed this downtrend. Price then broke through support and made a lower low, which further confirms this downtrend. What we also liked is that there is a gap before the next level of support, which means there's lots of room for price to move. We then wanted a pullback to reject this level on the daily time frame, as we know that the 50 EMA on the weekly time frame is also here. So let's jump to the daily. Here in the daily, we have a pullback with shrinking candles that show momentum loss, followed by two perfect long wick candles rejecting dynamic resistance. Remember that we also know the 50 EMA on the weekly time frame is right here as well. So we need to further confirm this pullback is over. So let's jump to the 4-hour time frame. Here in the 4-hour time frame, we had divergence, which is an early signal of a possible trend change, followed by a lower low, which again lines up all the time frames as bearish. So let's jump to the 1-hour time frame for entries. Here in the 1-hour time frame, we had a break below the 50 EMA, a break below the pivot, and an EMA cross, which gives more bearish price action. Your first entry could have been on this bearish engulfing candle, but remember that since the body is so big, it requires the target to be further away as your stop loss is also further away, which means it will take longer for price to get there. The second entry was the better entry, and there was two opportunities. The first was at this rejection here, and this is a good example as to why you need to not put your stop loss too tight, as you never know if price will pull back like this and swing before it moves. This is what we mean when we talk about not choking the trade, meaning giving your trade room to breathe. The second entry was even better because this rejection here would make it two rejections of both the pivot and 50 EMA. Which means price tried twice to push higher and failed. So after you had this candle rejection, we jumped to the 5-minute time frame. Here in the 5-minute time frame, we had a break of the short-term trend line with a momentum candle and then a break below the 50 EMA. This was a picture-perfect entry from the weekly time frame all the way down to the 5-minute time frame, and all time frames lined up perfectly. This was an A+ trade. Now that we have our bias set, if we get more good rejections of the 50 EMA, we can take trend following trades, as we have the higher time frames bearish on our side. As always, make sure there are good rejections and watch the previous videos to review what good pivot rejections are. So let's jump to the pound yen. Here in the pound yen, price is clearly making lower highs, giving us a bearish bias. But the breakthrough support is the confirmation of heavy bearish presence. And we also like that there is a huge gap before getting to the next level of support. So let's jump to the daily. So here in the daily, same thing. All red candles after price broke support, showing only bearish momentum. So let's jump to the 1-hour time frame. This here was the perfect entry. You had shrinking candles as price pulled back and approached the pivot, and then a picture-perfect long wick candle rejecting the pivot and the 50 EMA. So after we had this, we jumped to the 5-minute time frame to confirm that this pullback is over. So after we had the 1-hour rejection, price breaks below the 50 EMA to further confirm bearish momentum on the immediate 5-minute time frame, meaning in that exact moment. As always, you could have went for the quick 1-for-1 or moved your stop loss to break even after the 1-for-1 was achieved. These two trades were examples of very high quality trades, which involved time frame confluence, but also using the pivot for a more dynamic and precise entry. So thanks for watching, and I'll see you in the next episode.